Good afternoon. Good afternoon. It's Noble. It's 12 o'clock. I feel good. I'm starting on time. Oh man. So today is Saturday. What's today's date? The 29th. So I wanted to take some time. I had a couple good consults this week. Actually, let me slow down. Let me back up. Let me back up. Let me back up. I'll tell you a quick story while more people hop on. As a matter of fact, this is interactive. So if you have questions, feel free to ask questions. It's live, it's interactive. I want you to ask questions. I want you to feel like this is for you. It is. Matter of fact, for the people who are on, if you let me know where you're from. I'm in Atlanta right now. Where you watching me from? Where you streaming? Where are you at? I know where I'm at. Where you at? Let me know. Today I wanted to break down a couple of the markets. The metaphor I use, I love a good metaphor. I'm like, investing's a sport. It requires skill and a lot of time and repetition and strategy and plays, and it's defensive, but it's offensive, and it's fun, but it's also serious, but it can change your life. It's for your family, it's for yourself. All right. It's huge. But I really do think of it as a sort of intellectual sport. Same principles and mechanics, but you're kind of playing against yourself. And technically you going against the market, but you're really going against yourself more so. You can't control the market. All you can do is control yourself. Right. No, I was thinking about it because I had some consults this week. I day trade, I swing trade. For those who don't know what that means, I got into investing 15 almost more than that years ago when I first got out of college, like you guys. I had a job allowed me to get 401k. I didn't know what the heck I was investing in. I did that whole thing, but I had made it because I had a job that had 401k. I didn't know too much about it. I went to some firm in Atlanta, came to my agency, my first agency. They gave us this amazing presentation, told us how we could learn how to build wealth, these 6 steps. It made sense. I was locked in. I was like, yes, this is amazing. I was early 20s. I didn't have any money. I went, made an appointment. I'm really intimidated. Everybody's walking around with suits, big building downtown, somewhere near Buckhead. I sit down, I have my little conversation. Everything was great. And then they needed a couple $1,000s to just to like set me up. And I was like, oh, I don't really have no money. And they was like, well, come back when you got some money. Right. So that was a negative. That was a pain point. We call those pain points in life. I didn't know what God was getting ready to set me up to do or to be, and to get here today. I was at a lady's house in my church helping her to move. She was at her in her room, had these charts on the screen, all this stuff moving. I didn't know what it was. I'm like, what are you doing? I'm like, what is this stuff? I'm grabbing boxes. She was like, oh, I day trade. I'm like, you day trade? What does that mean? She's like, I make money from short-term, really quick movements in the stock market. I'm like, you doing well? She's like, yeah, I've been doing it, for about 10 years, my husband works. I don't. I just do this. I was like, dang, okay, all right. She was like, you want to learn? I was like, yeah, I think so, She gave me this book. Never read it. I couldn't get into it. I tried. I had some desire. I couldn't go anywhere. It just I needed somebody to break it down, keep it practical. Right. So fast forward, I'm making 6 figures. First time in my life. I'm working at Bank of America in Charlotte. Shout out to CAU. That's how I got there. CAU's M.B.A program, Clark, Atlanta. I went to Indiana University for undergrad. Shout out to my Hoosiers. Depending on where you at. HBCU, predominantly white schools. I've been to both. Right. Big difference. Both taught me a lot though. I'm at Bank of America, 2008. Recession. We're sliding into a recession. I'm seeing people who were at Bank of America for 10, 20 years getting laid off. I know they about to lay my little butt off. Oh, and I just started making some good money. I was like, ain't this something, right? I done worked my whole life to see, I was making 94,500, my first salary technically, but bonuses, merit bonus, it was over six figures. So, buddy of mine at the time hit me up and was like, "Yo, I think Citibank's about to get a bailout." I didn't really know too much about bailouts and what it meant and how it worked. And he was like, "Yo, I think I think we're about to get this bailout. You might want to take advantage." Every bank that I've been looking at that's gotten a bailout, relief from the government, from the stress of the imploding, all these prime mortgage loans that were killing their books. People couldn't pay the loans, they couldn't afford them. That's debt. That debt has to go somewhere. That affects a company. It affected the whole market, the whole world. So I was like, okay. I had a share builder account that I had signed up for during grad school. I had 3 stocks. I bought the DIA. I ain't even really know what it is. Now, years later, I know exactly what it is. I filled out this little questionnaire. It was doing a risk profile to see, was I really risk adverse? Was I open to the stuff that moves fast, or did I want something that just kind of moves slow to start building some wealth? Love what Share Builder did, because back in the day, what it would allow you to do, even if you were a broke student going through your MBA, I put $50 a month into the market. $10 went to the Dow Jones. That was the safe ETF, the safe index. Think of an index fund. You heard that term, index fund? What does that mean? Like, all these big words. What is index fund? It's like an index at the back of the book. Index is like all the words. So it's kind of like it kind of captures everything in the book. So the Dow Jones is 30 of the biggest, broad, most widely shared companies in the world. It's a good chance you invested in one of those 30 and you don't even know it. The S&P 500 is 500 biggest, best, all right, kind of index. It's almost like what I call the all-star team when I'm teaching my kids or teaching adults, right? So my $50, I was buying $10 worth of the Dow Jones, and the only other 2 stocks that I picked that I, just like, what do I use? What do I buy? All right, my little slogan: buy what you buy, invest in what you buy. What do you use? Now you got to make sure it's a good company. But if you're consuming and buying Apple stuff, why don't you think about buying some Apple and get into the ownership side of this whole capitalism thing? It was designed for us all to make money, but we're not taught. We're not taught. They don't teach these kids. They don't teach me. They didn't teach me in grad school. I didn't know about options and futures and Forex. I did. I should have. I had a master's. I came out with a master's in business, but that master's really meant that I had certain skill sets that I could provide to a company or maybe myself as an entrepreneur to make money, but I couldn't just go to the market directly to make money. That's the disconnect. So I was investing in Apple, Google, and the Dow Jones. That was all I knew. I had 401k prior to that. I had put some money in and I was investing. I didn't know what I was doing, just like millions of people who are just confused and lost about this stuff. So fast forward the story real quick. This is how I got to today. It's going to be a big leap because I'm going to jump like 10 years, but I just want to give you some foundational stuff. I got to that same buddy who called me. I was like, yo, I got some money. I had a little change for the first time, as my father would say. I miss him. Rest in peace. Little change. I had a little change. I had like $5,000 in my savings because I was working in corporate. They were providing my housing. I really didn't have any bills, right? So I was just kind of saving, stacking. But I had a good 5 that I was like, let me just kind of keep my checking account at 5,000. This was like 2008. So when this buddy called me, I got super excited. And I said, you know what? I have nothing to lose. I don't have a wife, no kids. Let me try something different. I don't know nothing about the stock market, but let me see if he's right. I don't know. I trusted him. Trust is important. I went online. It was a Sunday night. I'll never forget this. I typed it in. I bought $5,000 worth of Citi at the time. I'm sitting there watching TV. Next thing I know, it pops up on screen. This just announced Citibank due to get a $58 billion bailout from the American government. I was like, oh, snap. I had just placed an order. Now, this is what I didn't know, right? The ignorance. I thought because he told me he bought shares at like 350 on Friday, I thought I was going to get these shares for 350. No, that's not how it works. Market was closed, right? So I placed my order into the market. The market actually is paying attention to those orders that are being placed, even at night. Those limit orders y'all are placing over there, the market is paying attention. It's calculating all that, right? So when price opened the next morning, it's actually digesting that news, which was good. Prices started to go up. Me and you don't have access to, touch the markets when the market is off, but some people do. All right, it's kind of how it's created. I think it's a little shady in a way, but whatever. But all those orders flowing in are what they use to kind of calculate the opening price at 9:30. All right. So at 9:30, the price had jumped up just from that news from like 350 to like $6. It had almost doubled. So his money had almost doubled from Friday to Monday. So I get in. I ain't know what I was doing. I just waited. And that 5,000, it pretty much doubled pretty fast. And I was like, what the heck is this stock market? What is this thing? What is this? Somebody told me to do something. I just had the money, had no idea what I was doing, but I was willing to risk. All right. I was open to the risk because I wanted the experience. I wanted a one-on-one personal. I was cool if I lost it. I was cool that it was paying for my rent and everything anyway. Right. That was life-changing for me. Because that first, I would say, first active investment, buying a stock on my own brokerage. All right, brokers you used to have, I mean, you still can technically. You can still call people to say, "Hey, can you place this order for me?" They'll do it, but nobody really does that anymore, right? We have enough technology information. We're pretty much way more autonomous than like 30, 20, 30, 40 years ago, right? So you have a broker on your phone. You can buy any stock in the world on your phone. I got into futures trading. Futures, I was making 500 to 1,000 every day. I was like, this is crazy. Wow. I had studied for 9 months. My dad passed away, left us a little bit of money, left us some change. That change was where I started my first account. I paper traded on a fake account for 9 months just to practice. Just to practice. Hear me what I'm saying. This is so key. I practiced for 9 months because once I got a taste of the market and realized that this could change my life, my future life for my family, and my kids whenever I have some. All right, future generations, this thing is powerful. So I want to take it serious. I didn't approach it the way most people approach. My first thought was I wanted to trade futures. I was going to keep learning. I paper traded for 9 months. I started reading. I was reading any and every book I could read. Every Saturday, when I was in Charlotte, I was only going to be there for 6 months. I didn't have a girlfriend at the time. I did for a second, and then we broke up. That was even better. I was glad she broke up with me. It just gave me more time back. It just gave me more time to get into what now I realized was my purpose, part of my purpose, right? And I was reading any and everything I could read. Benjamin Graham, Intelligent Investor, 21 Candles, just all these little books, classic books to things that I was just consuming. I was consuming. I was at Barnes and Nobles. I call it Barnes and Me. I was at Barnes and Me all the time because I had to get it. I had to get more of that 100% return. It was like magic. How you just push a button and then wait a few weeks and you got twice as much money? What is this? What is this thing? What is this thing? I wanted to understand it up close, right? So I got into futures. My cousin-in-law Joel, I'll just say cousin. My cousin Joel Harrison. Shout out to Joel. Joel, a few years later, I was looking to get a house here in Atlanta. I met Joel, didn't know him, growing up. Well, he married my cousin in Zinga. Shout out to Zing. And we were looking at homes, and Joel was like, "Yo, I pulled out my phone. I'm checking Apple, Bank of America. I was investing more now. This was maybe like a year, maybe like 8-9 months later." Joe's like, "Yo," he's like, "Yeah, I'm like, when you want to go look at homes again? I know you got to work and you got other clients and stuff." He's like, "Nah, you like right now I only got a few clients I deal with. I day trade stock and futures." And I think he might have said stock options and futures, but specifically futures was what caught my attention. I was like, what the heck are futures? Now I'm gonna be real with y'all. I got an M.B.A, so I earned that M.B.A. I earned that undergrad degree. A lot of hours, y'all know. So I consider myself pretty smart. I love puzzles. I love intellectual debate. I love conversations. I love reading, all of that stuff. I'm a bona fide, intellectual. I'd rather have a stimulating conversation and probably do almost anything else in life. Yeah. I enjoy it. I enjoy learning, thinking, wrestling with ideas. I don't get emotional. People be thinking I be getting emotional. I'm like, bro, I'm just logical. You get in your feelings, not me. I just like the conversation. And I ain't afraid of the conflict of, right? You can't be afraid of the conflict if you're gonna be an intellectual, right? You know. But he was in that moment showing me that I thought I was here and I was really down here, right? And so he told me what futures were. He was just like, yo, I try to make like 1,000 a day, you know. And if you come by the house, if you want to, learn, I'll show you what I do. Went to the house. He pulled up a chart. Let me pull up a chart now for y'all. Let me pull up a chart for y'all real quick. Let me see. What do I want to look at? Oh, let's look at this. Let's look at this. Matter of fact, I'm gonna take everything off. So, oh, y'all can't even see that. Oh, yeah, you can't see it. Okay. So, I'll keep me bigger. So, this is a chart of this company right over here is Lucid. Lucid. So, you know about Tesla? This is Lucid. Lucid's a EV company. They sell really it's a sexy little car. I don't know if their production is there and all that stuff yet, but this is Lucid. Each one of these little candles represents a month. If it's red, price came down. If it's green, price went up. You can see right now these last 1, 2, 3, 4 little candles, price has been price has been dropping. Is that a good thing, bad thing? I don't know. It depends on who you are, right? We'll talk about Lucid in a second. I'm gonna just leave the chart there. We're gonna just leave that chart there. Finish my story real quick, and then we're gonna get into some of this other stuff. So, I was like, wow, futures. I don't really know what futures are. What are you talking about? Gold, commodity, silver, oil? He's like, yeah, all that stuff. But it's just like it's higher leverage. You can make money faster. You can make it or lose it faster. He pulled up a chart when I went to the house and showed me, this is what's called support. These are candlesticks, just basics. And I was hooked, y'all. I was hooked. I was like, this is the best thing I ever heard of. This is the best stuff I don't know that I'm going to learn and master. And I knew it from day one. From day one, from the moment, from that, like from just those few conversations, these couple things, like literally changed my whole life. Right. So then I went on this journey and I did quit my job. And I was really successful when I first started. And then I got humbled by the market during the European debt crisis. I'm specifically talking about day trading. Investing is easy, honestly. So let me stop for a second to pause for station identification. Investing is buying and holding something for at least a year based on the government's definition, at least 365 days for a year. Right. So January 29th to January 29th. If I bought a stock Monday and I exited that stock, whether I was in let's just say I made money, right? I'm sure the market would be up higher a year from now, right? A year from now, then the capital gains, the taxes I got to pay on it as an investment are different than if I made money on that stock. I bought $25,000 worth. It jumped up $5. Let's say I have 5,000 shares. 5,000 times $5 is 25,000, right? So I could make 25,000 if a stock that cost, let's say $5, jumped up 50%. That's a $5 move. I bought 5,000 shares. That's 100% return. But most people don't have that much money, right? So futures, options, those are different. It's a different ball game, right? You gotta so investing's like 101. It's for everybody to be able to make money buying shares. You can buy fractional shares just like 401k. You go to the gas station. What you say? You don't say like, I'm gonna get 7.5 gallons of gas. Nah, you say it based on the dollar amount, right? You buy based on the dollar amount. The pump will figure out how much gas it is. You don't know how much gas you actually buy. Nobody knows. You know the dollar amount. Same way 401k works, the same way the technology works now. You can say, I would just want to buy $100 worth of NASDAQ every month. Even if NASDAQ costs more than $100, which it does, you will buy a fraction of shares, right? You'll buy whatever that $100 will get you, right? So the market has changed over the years. It allows anybody to start. Anybody to start. Let me pause for a second. Pause for 2 seconds. Let me say some shout outs to some people. Christy Allen in Dallas. Christy always on. I love Christy. That's my homie. What's up, Christy? Let's see who else we got. Felicia Bridge is out in Cali. Y'all 3 hours behind. So like 9 o'clock out there. That's what's up. Man, it's early in the morning. 9. That's what's up. Let's see. Chastity. is in Texas. Kylene, Texas. Penny Pasta, my homie, went to IU with me. Great friend of mine. Love her to death. Penny, what's up? Keisha, currently visiting family in Antigua. Oh, that's what's up. That's what's up. What's up, Keisha? Rocky Faulkner. Somebody tag Rocky. That's what's up. I hope Rocky's watching. Matia said, how you say this name? I see it all the time because this I see her. I remember the little thumbnail, which is cute. I gotta learn how to pronounce your name though. I don't even want to mess it up. I probably did already. She said, I like how you break it down. Appreciate that. My guy Charles Holland. Charles Holland, what's up, big bro? I think Charles is older than me. Maybe I'm older. Bro, either way. Big bro, little bro, it don't matter. It don't matter. Charles was just in my options class, this last one that ended. We're eyeballing Apple. Apple done pop back up. We're gonna look at Apple today too. What is Apple about to do? Is Apple gonna lead the market back up? Well, when earnings just good and Apple popped up and Apple's about to come right back down with the rest of the market. And I don't know that the market's about to drop. Mondays are traditionally, historically, the most bullish day, the day when people are buying, bulls buying, I believe, the stock, right? Bulls, bears don't like it. You want to sell it. You think it's coming down. Bulls, you want to buy. You think it's going up, right? Nadine is out in Brooklyn. Brooklyn. That's what's up. Detroit. Somebody's watching from Detroit. Mythia. Myth. I'm reading it. Say myth. I see Mythia. The T is throwing me off. Okay. All right, I'm gonna go with Mythia. I think so. You'll tell me one day. We'll figure it out. Because I want to get it right. Oh, Charles tagged somebody. Cool. Okay, she said yeah. Mythia. Oh, that's what's up. It's different. I like that. Okay, cool. I feel better now. Because you always be on my lives. I appreciate you watching, checking me out. So let me come back to my story. So investing is a long-term game. Trading, though, what is trading? It's just investing sped up. It's faster. You can make more money, right? You can make more money. We tend to, because everybody, let's be real, y'all. Just for a second, let's be honest. I'll be honest. Y'all be honest with me. Let's everybody just have a moment of full 100% financially erotic truth. And I say erotic because that's just kind of like a weird term, financially erotic. What am I saying? We lust. We do. It's not a worship for money. No, I don't like worship money. All right. I think, biblically and practically, worshiping money will get you into some bad places. But money's required for life. You got to have a skill set. You got to work. You got to do something to create value. But it's beautiful. Why? Because it's just an exchange of value. So you know how to cut hair. I'm going to give you my hard-earned money because you can cut hair. Make me look good. I feel good when I cut hair. My dad was a barber for 30 years. Right? I can teach you about options. You pay me to teach you something that took me years to learn, but I'm just speeding up your process. It's value for value, but what's free in this world? Right? You got to learn how to work, and you need a skill set and a work ethic and yada yada yada. Y'all know that. I'm preaching to adults. Y'all know that. What's my point? My point is, in a magical world, we would all love to have one huge idea, do one thing, and get paid so many millions of dollars. We would never have to work again. We all want to make easy, crazy, fast, big money. We all do. That's why some people will go the more disciplined, I'd say more adult route that requires more, that takes more time, long-term investing. 20, 30 years in the NASDAQ, in the Dow, in your IRA, knowing what a 401k is, a Roth. What is a traditional IRA versus a Roth? What does that even mean? All right. Learning. You got to learn this stuff. That's one route. You could buy lottery tickets. That could be your path, your strategy to get rich. We all want to be rich. We all just want to have crazy money to be able to buy whatever we want to buy for our family and ourselves, to go where we want to go, to live, to have an abundant quality of lifestyle. We do. We all do. We can all admit that. Okay. Don't that feel good to just admit it? I want to be rich. I want to have crazy money. Not just to have it for no reason, but so I could just, I don't have to worry about things. You got fam, parents who are elderly, you got kids, you want to be able to provide them the best. So that's the core of it really for me. It's not the lust for money. But that is, I think, a reality that a lot of us need to just admit. Why? Because when you admit it, then you can at least start to get clear on, okay, how do I do it now? How do I do it? What's the best path? So today what we're going to talk about is a couple different paths. With trading, the fastest way to make more money faster is to use more money. But how do you use a lot more money if you don't have tens of thousands to hundreds of thousands of dollars? They created something called leverage or margin. What is margin? What is leverage? Well, think about it like this. Let's see. Let me check this out. What is Lucid at right now? So Lucid is sitting at $27.15. $27.15 per share. If I wanted to buy 100 shares, because I believe it's going to get all the way back up to, what was that high? Just say 50. And I'm going to just say it's at 30 to keep the math simple. It's at 30. I believe it can get all the way back up to 50. But I can only take advantage of that based on how much money I actually have. All right. So I'm limited based on my own resources. Even if I talk to the CEO himself, I know the competition. I did all the research. I've studied the patterns. Now they just IPO, initial public offering, right? It's like the stock's birthday. This company hasn't been around for 20, 30 years, right? So they don't have a ton of historical reason to necessarily be bought, right? It's not an Apple. It's not a Microsoft, a Facebook. It's not even Tesla. Right, it's supposedly a Tesla killer. It's a competitor to Tesla. Very volatile stock so far this year, but it's tanking with the market. So that's a good sign. I like stocks that go with the market. That also means when the market is cruising, this stock should be cruising. And it's more volatile than the market, which simply means if the S&P ends this year, it's up 20%, which will be great. This stock will probably be up 40, 70, 80%. It's more volatile. It moves twice, right? It's like if this goes, I'm trying to find myself, right? If this is the S&P and the S&P moves this much, this thing, right? I'm going the same way. In this little move, right? This little move, this thing is going to go twice as much. All right, y'all know what I'm saying? Like it moves, the S&P moves 20%. This thing is going to go another additional 20% easy. Why? There's something that is called a beta. Beta is just a little term. It's a little math behind it. All it really does is tell you the speed of that stock compared to the broad market. The all-star team, the index that everybody in the world watches, the S&P 500, right? 500 are the best stocks you can buy. If it's a good stock, it should be in the S&P. All right, think of it like that. How can you be a great basketball player in the NBA, but you're not on the all-star team? You ain't that great of a player if you're legitimately not on the all-star team. Right? That's basic logic. Basic logic. A lot of people start investing, they start picking all these companies, don't even think, haven't been taught, don't know how this works to even just check, is it in the S&P? Microsoft and Apple, two of the biggest, best companies in the world. They're in NASDAQ, which is an index. They're a part of the S&P, which is an index, and they're a part of the Dow. So they're that good, right? It's like they're on the offensive all-star team, the defensive all-star team, and the three-point tech stock kind of all-star team, right? They're that good. They're that good. You can't really talk about the stock market and not talk about Apple and Microsoft. All right. So Lucid will prove itself to be a good company, or it won't. We'll see. But if you wanted to buy 100 shares, it's going to cost you roughly $30,000. I'm sorry, it's not 30,000. It's going to cost you about 3,000 because it's about $30 now. Right. So it's going to cost you $3,000. I wish I could do anonymous polls. How many people watching me have 3,000 that you could just put on something, put into a stock and just relax? Maybe you do. Maybe you don't. Maybe 3,000 to you is like, oh, that's nothing. Maybe 3,000 is like, ooh, that's some money. That's some money, right? I don't know. But there's another way to buy shares. There's another way to still, if you believe that the stock was going to go from 30 all the way back up, there's another way to do it where you don't even have to have $3,000. And that's where we get into options. So today what I want to do is I want to explain options a little bit better. Futures a little bit better. You can actually, so let me kind of walk through just real quick. You can trade as a trader, as somebody who wants to learn the skill set of how to make money faster than being just an investor, and you need to do both. You need to do both. But you gotta start with investing. Start with it, right? Start with investing. Why? Because starting with trading is like, oh man, I'm trying to get away from basketball metaphors. It's just that season. Uh Starting with trading is like, let's use cooking. You should know how to cook. I love cooking. You should know how to cook. Use a cooking metaphor. It's like investing's like boiling water. It's just it's anything that just requires boiling. Spaghetti. It's just turning on the water. Now you can get a little fancy, put a little olive oil in it and let it kind of, so it don't, just you could do a little, even with boiling, but let's just keep it basic. You put the water in, you turn it on. It's just real basic. It's real basic. It's not a lot to do. It's not complicated. There's not a lot of steps to it. All right. Not a lot of steps. That's investing. You invest, you're building equity, just like if you have a mortgage or anything that you buy that takes a while for you to like truly own it, you're putting money into it, but that money will be value because the thing you're buying is worth value. You got a home that's worth 300,000 and you got only 10,000 left. You have $290,000 in equity, right? So it's not cash, but it's still value that people and companies will recognize as value. It's close to money. It's not liquid, but it's close to money. Why? Because you got a home. You have something, an asset worth 290,000, right? So every time you buy into the stock market, month after month for years, and imagine if we were taught this stuff in like middle school, so we could get ready for it and get a little bit of that hunger for it, right? Because you got to make money. It's cool, right? We already said, yeah, it's cool. We all want to be rich. We know that, right? Cool. That's cool. Ain't nothing wrong with that. Nothing wrong with that. You can help the world. You can do a lot with money. You can't really do too much with your gifts and be broke. All right. So there's a lot of functional reasons you need to be thinking about this stock market, right? That are not solely about just money for money's sake to just buy material items. Nah. You can't go on a missions trip. You can't go on no missions trip without no money. You're gonna be begging in church for money. Happens all the time, right? So. Uh, there's a couple different ways you can trade. Options is one way. I actually think pound for pound, dollar for dollar. If we had a long conversation, a healthy debate with all the statistics and logic and reason, not emotion, not because I feel like I'm right, but we could literally almost put together a business case, an argument for which way of trading to make faster money should you start with, or should you at least make sure you learn as an adult? And I literally mean as an adult. There are some things financially that we are just not taught. I'm gonna keep saying it all 2022 and the rest of my life. If you're over 18, you need to learn how to trade options. It's a skill that will give you an extra additional stream of income for the rest of your life that can challenge and potentially make more than almost any career you can name, because it's that amazing. The math is that amazing. The buying power is that amazing. When there's volatility, you can make 1,000% return in 2 days. I did it. I should have did it several times. I missed like two of those trades. Apple just came down, had a really nice volatility squeeze is what it's called. It's just when the market is moving, everybody who can buy is buying. It's volatile. All right. I got into an options contract. 2 days later, that contract, what I bought, was up 1,300%. 1,300% is a multiple of 13 in 2 days. All right. Now imagine if I had put 10,000 on it. Would have been $130,000 in 2 days. And then imagine if a year later I had the confidence to put 30,000 on that same type of trade, and it only went 200%. Multiple of two, that's still 30 to 60, right? So it's a lot easier to like realize how people become millionaires with investing when we just start playing with some basic numbers. Now I know that's a really high percentage. I know that is 1,000. Every trade, you're not gonna make 1,000% all the time, right? So it's like, okay, Is that normal? Nah, no, that's not normal, but it's very much so possible. It happens all the time, probably every week on dozens of stocks, right? So you got trading options, and it's actually you're trading options on stock. So what are options? Let me go here. So what are options? Options is just a cool way to leverage. You're borrowing, renting. You don't really own the shares, right? It's not like you're buying them, but you're placing a trade, right? It's like you have the metaphor I always use, it's buying them wholesale. You just have the opportunity to take, take your money, buy some you can buy options, right? But options are going to allow you to buy those 100 shares of Lucid that you actually can't afford because you don't have the $3,000. All right. So technically, the way I look at it, it allows middle America to figure out how to create faster income and get rich and to add on to your wealth. Your wealth is really going to be built with your long-term view. It's time. It's compound interest. It's time. It's time. 20, 30 years. What you doing? What you been doing the last 20 years? What are you going to do the next 20 years? What are you going to do the next 2 years? Are you investing and putting something in the market right now? NASDAQ, your favorite stock, something. You buying Bitcoin? What are you buying right now? You're building or destroying your own future right now. Why do I say building or destroying? Because the stock market has done really well over the last 120 something years. It's hands down factually the best investment vehicle the world has ever created. Nothing has created more millionaires and billionaires than the market. You might as well consider it. And it's tricky when they call it the financial, financial industry, like they should call it the money industry. How do you make money? Make money by specializing and learning the money industry. It's the markets. It's the markets. Futures market, options market, stock market, cryptocurrency market, foreign exchange market, binary options market. Things you can buy of value that will exponentially make you value and even compound over time to make you more value. It's amazing. It's the most amazing thing we've ever created. I know when we think of the art or we think of creativity, we think of like the arts and music and and those are created, right? Those are amazing things we've created. But these markets, whew, it's the most creative stuff we've ever invented. It really is. Just has a lot of math, and a lot of y'all are afraid of math, and you get tied up. You don't really see the creative beauty in the markets the same way you do with music and cinema, right? Painting, sculpture, all of those things. Yeah, that's art. Yeah, that's art. This market is art too, though. It really is. Because we just made it up out of thin air. It does whatever we design it to do. All right. So think about this for a second. I'm gonna pull up. I'm gonna go back to good old. I'm gonna go back to Lucid, and here's what I want to do. Take my name off. So this is Lucid. You're looking at Lucid. This is what's called a candlestick chart. Each one of these charts represents a day. So I'm actually going to go to the week chart, and I want to show you. I want to step back. This is Lucid's entire history. So it IPO'd here on 9/14, first day, very first day you could have bought it, right? Brand new to the market. It has no history. You can buy it if you believe in it. You don't have to buy it. Do whatever you want. You could just watch it. All right. This stock, you want to give a stock a little time, right? So how high did this go? This moved. The lowest it went in this first, this was February, right? So this is what is that? 9/14, 9/2. So that's what? About 5 months. So in about 5 months, this stock went from this low all the way up to here. What percentage is that in 5 months? That's a 585% return. It went from $9 to 64 in a very short amount of time. And then it dropped really, really, really fast. So think about that. Week after week after week, it's going higher and higher and higher. And then this big ugly red candle, it drops from 64, in 1 week came all the way down to 30. So it lost half its value in a week. It took 5 months to get there, and it lost half of that in a week, in 5 days, right? This is why the market's tough, right? Because things that are volatile that can move and make you a lot of money really fast can also, they can come down really fast. Imagine if you heard about it late, you bought it at 60, and the week after you bought it at 60, you walked away, you weren't paying attention, you looked up and it was down at 30. You lost half your money in a week. You'd be pretty upset. You'd be pretty upset. All right. So, as a trader, traders have to learn how to read candlesticks. These are charts that show you pricing information, right? So, something that stands out to me should stand out to you. This is called support. What is support? It's just a floor. It's just a visual area that literally, I taught middle school kids this. It's just an area where you see price bouncing. So it's something about 17, just say $18. We went down to 18 and we kind of bounced for a week. We came right back to 18. That's where the market said, yeah, we agree. We agree that it's worth 18. Shouldn't be any lower. That's when people are buying. That's when the big institutions that are buying billions of shares came back down again to the same price. Tried to get back up to 64. Oh, we tried, but then we couldn't get there. Market's been having a bad 3 weeks. Whew. So if we keep dropping, if it gets worse, where are we coming down to? We probably gonna come down to 18. That wasn't hard. I just drew a little box, drew a little line. It wasn't hard. I've taught middle school kids this stuff. I'm just drawing lines. I call them money pictures. I'm just drawing little money pictures. That's all. This is money in pictures. It's money in pictures. It's value in pictures. Right. So let me check the chart. Let me check the options ladder real quick and give you some actual math. So let's say you believe that you believe Lucid right now. You're like, I want to buy Lucid right now. I love it. I think it's a great company. I've studied their fundamentals, which is just like profits, losses. It's like the accounting that tells you the company's actually a good company, right? PG ratio, PE ratio, what else? All of these ratios, inventory turnovers, looking at profits, assets, liabilities, just basic core. Is it a good business? Is it fundamentally a good business? You have to know the math behind the numbers to even process that, right? So you can't get away from the math. This is probably why 45% of Americans own no shares of any company, right? Because we got a math anxiety issue in this country. We don't teach math in a way that gets kids engaged. So we grow up and become adults who are afraid of anything that is primarily based in and of math. And that's all this is math. That's all it is data. It's just prices. It's numbers going up and down. But it has real life-changing potential. It makes all the billionaires and millionaires. All right. So let's say, for example, we wanted to buy Lucid. Not we believe, but we believe in the company. And we're like, you know what? The market is going to recover a year from now. I know. Based on fundamentals, based on A, B, and C, it's a company I believe in. Maybe I own a Lucid car. I probably, I don't. You probably don't. Maybe you just believe in it. You believe in the space. You believe in electronic vehicles as this is going to be the future. All right. You seen what Tesla's done. You like, yep, I want to invest in this company. So a way you could trade it. You could take an options trade that says, hey, I want to give this a year. I believe within a year, the price will get back up to 50. So a year from now is, I'm looking at the contract. Y'all can't see the screen where I'm looking at, but, oh, okay, cool. So if I went all the way out to January 24th, wrong one. January 20th of 2023. Here's the beautiful part. Let me keep this real simple. Instead of buying shares directly, buying those shares for $27 each, right? Instead of buying those shares for $27 each, I can still borrow from the market. I can still borrow from the market those same 100 shares in an options contract, and I'm buying it wholesale. It's like going to Costco, right? Every time you go to Costco, you gotta buy in bulk. You can't just buy like one of anything. Right? You can't see something in Costco and be like, man, I just want one box of cereal. No, you got to buy 3 or 4. Right? You can't just buy like 2 bottles of water. No, you got to buy a big case of 32. Right? Why? Because it's designed for you to buy in bulk to get a really great discount called wholesale buying. The most educated and wealthiest people in the country shop at Sam's Club, Costco, and BJ's Club. If you have a Sam's Club, Costco, or BJ's Club card membership, you're already thinking like an options trader. It's the same thing, but you probably don't know how to trade options because nobody made the connection. That's why we go to Sam's Club, Costco, because of this huge discount. Now you got to buy in bulk, so it's still not cheap per se, but it's actually the cheapest per pound, per ounce, per whatever that you can find those brands anywhere. It's Costco, it's Sam's Club, it's BJ's. All right, so it looks expensive because you got to buy it in bulk. It's actually per unit, per item, the lowest cost you can get. That's why I got a Sam's Club and a BJ's Club card. I never really mess with Sam's Club. I don't know why. I mean, Costco. I got Costco and a BJ's Club. Right. So that's what options is. So here's the thing. Let me get to the math. So instead of buying 100 shares for 27, let's just say $30. Right. That's $3,000. I want to give it a year. So this is kind of, we're setting up now like our trade in our mind, right? 27 bucks. Let's just say once again, 30 up to, man, if I'm gonna do 30 to 60, 30 back up to that same little high you can see. Let me put a little line right there. All right, if we could get right back up, here is I'm gonna put a line, actual line. Here is 60. 60 is right here. All right, there's a 90% chance if a stock makes a new high, it will eventually at some point in the future get back to that new high. 90% chance. 90% chance. Not a lot of stocks fail. Not a lot of stocks go to zero. You think these companies do all this work just to fail? No, they don't get to IPO level. They're not, evaluated as being worth 200 million billions and then fail in a couple years. No, this ain't small business. These companies are going to be around for decades, potentially centuries. We're new. Oh, this is new. We only had the stock market for like 100 years. We're not like 800 years into the stock market. It's actually still very new for humanity as a species. It's only been around 1 century. Right? It's new. It still is. It really is. And we're still developing and creating tons of things to give people different ways. Now we got crypto, right? We got something new you can make money on, right? We just keep creating new ways, new things, new assets, new ways to make money to provide for yourself and your family. And for rich folks to stay rich and wealthy to stay crazy wealthy, right? So that contract that I was looking at, if I bought a contract, let's take two people, you and me, whoever you are. And I'm going to pretend you don't know anything about options. So you believe in the company. You think it's going to get back to 60. You buy it Monday at 30. It's going to cost you $3,000 to buy 100 shares. And I'm going to do the math with you. I like pulling out the calculator so y'all can make sure I know what the heck I'm saying. $100, 100 shares times 30 bucks. Bam, it's $3,000. So that's one way to do it. But I, as an options trader, I'm gonna go about it a different way. I still have the same belief. I want to make money too, but I'm actually gonna make a lot more money than you, and I'm gonna use less money than you. Right? How? Options. So I would find a contract. I won't get heavy into it for those that know a little bit, but if I want to buy it, I believe it'll be above 30. I believe it'll be above 30. I think it's going to 60, so that's my target. 30 is my strike price. I believe it'll be above 30. My expiration for the contract is a year from now. Every time you buy options, so when you were to buy this directly, you can get out whenever you want to get out. You can get out whenever you want to get out. Just buying as an investor. You can get out whenever. You can get out 10 years from now, 2 years from now, year 3. You can get out tomorrow. You can get out whenever. With options, though, you have to, as you place the order, you have to figure out how many contracts do I want to buy? Once again, a case. How many contracts do I want to buy? How long do I want to give it? Because that changes the price. And then what price do I believe based on this time frame it will be higher or lower than? So you got to know direction. You got to have right. It's more intense than just boiling water. This ain't boiling water. And I can't tell y'all, there are millions of people in the last 2 years who have just been at home, who have been bored, who have had a little money, who have heard about somebody making a lot of money in the stock market, who just started trading and just jumped into options because they hopped on Robinhood. Oh, it's easy to place the order. Yeah, it is. It's also easy for you to lose your money because you don't know what you're doing. And you're not approaching it like it's something you're taking serious. All right. It's just not. This is a business. It's literally a business. It's literally a business all in your head that allows you to push buttons, leveraging the math and the buying power, the margin and leverage behind some of the greatest stock companies in the world to make money for you and your family. You probably want to take it serious, but we don't. We don't. Thousands, millions of people in the last 2 years because of COVID have just become options traders. Because technically, there's no barrier to entry. Once you put the money in your account and take that first trade, poof, you're an options trader. Imagine if you could become a doctor that easy, or a plumber, or a project manager, or engineer, or anything else. All right. You wouldn't. It don't make sense, but that's how this stock market thing works. And I've seen so many people with what I do, teaching, coaching, 7, 6, 7, 8 week long, detailed 30, 40 hours worth of content type of classes, teaching futures trading, options trading, long-term investing, free stuff like this, just to help, just to get your mind moving, because this to me is fun. It's like, what else would I be doing right now? Watching movies? It's Saturday. I'd rather be doing it. Well, I'd rather do that too, but I'd rather be doing this to help y'all out, right? So instead of, let me put this on the chart. So here we go. So that contract that I was looking at, I'm gonna type it out. I could give myself until January. They type it out a little weird, but it's January 19th of 2023. My quote unquote strike price would be $30, which is, I just believe it's going to be above 30, right? A year from now. Target, I think it's gonna go back to 60. Why? Because it's a good company. And Noble told me, and I double checked it, that 90% of companies that will make a high, 90% of the time we will retest, we'll go back to that high. All right. But how much does it cost? Here's the great thing. The contract costs $9.10. So what does that mean? Whoa, what you mean $9.10, Noble? I got $9.10. Wait a minute. Hold on. What you talking about? What you talking about, brother? All right, so over here, this is investor me. I still believe in 1 year. I don't have to have a specific date. My target is still 60, but how much is it going to cost me per share? It's going to cost me $27 per share. Actually, it's going to cost you $27 per share, right? Because you don't know how to trade options. The person that knows how to trade options can basically believe the same thing, but instead of paying $27 per share, I'm paying $9.10 per share. But it's not $9. You know it's not $9. No, it ain't $9. It's $9 per share. Just like at Costco. Yeah, that case, each bottle of water is dirt cheap. But you got to buy the whole case. You can't just buy one share. Oh, so how much is it? It's $9.10 times 100 shares. So think about that for a second. For you to place this, as a trade, you got to spend $2,700. All right, that's how much you got to spend. 100 shares times 27. For me, because I'm gonna use options, I want to give it 100. I want to give it a year, but I'm not paying $9.10. I'm not paying what you're paying. I'm paying $910. I'm paying $910. You're paying $2,700. I'm paying $910. Basic math. Basic math. Man, you better. I almost hit my mute button. If I hit mute ever on a live, I hit mute. Y'all let me know. Type in and be like, bro, you on mute. Like, bro, you hit, because the mute button is like right here. Sometimes I'll grab the mic and So I saw it that time, luckily. All right. So now we get into something. Now we can make some decisions. You got two friends. One knows nothing. One knows a little bit. You're talking to both of them. They seduce you. Provide a good argument. They provide a good argument as to why you should invest in Lucid. But one is like, just buy the shares. The other one is like, no, do not buy the shares. Just buy an options contract. Which one do you do? Well, just based on price, I know what 99% of y'all gonna do. You're gonna hop on Robinhood. You're gonna figure out how to place the trade. You're gonna buy it on Robinhood because it's easy to figure out. and you're going to buy call options. Call means you're making money when price goes up. It means you believe that stock is going to call you one day and be like, bro, we good. I'm up. I'm higher. And you're going to be like, cool. Right? It's a call option. You believe fundamentally. You're bullish on it. You believe it's going up. That's all it means. You believe it's going up. Right? So it's only $910. So here's what you should be thinking right now. For the price you're about to pay, I can buy 3 of these contracts. Ooh, and then how many shares am I, have I kind of rented? Like how many shares in terms of my buying power? If I buy 3 contracts and each contract is 100 shares, then I got 300 shares behind me. For you to control 300 shares, it's going to cost you almost 9 G's. Ooh, I'm winning. I'm winning. Compared to you, I'm working this smarter. Yeah, factually. Yep. I'm doing it the smart way because I know more. All right. So let's play out the example. I could do it in my head. Let's say I'm gonna put a big green candle. Let me draw this real quick. Actually, I'm gonna do it this way. Y'all gonna love this. Nobody teaches like this. This is how we should teach, but nobody does. Just nobody does. Except me. Expansion area. Let me get that 6. Oh, no, I want to go more than that. Hold on. Oh, 2. So what did I change to 6? Oh, expansion area up. No, I'll leave that alone. Okay, so let's say next week the market shoots up. Oh, we got a good week. All right, and then the next week goes even higher. All right, and then let's say we get I'm gonna change that to red. Let's say we get a bad week, and then just I don't know, just something amazing happens. The market is just I don't know, y'all. We never know what's gonna happen. We never know. Let's say we get back up to 65 in a very short amount of time. All right, I'm gonna get rid of this line. I'm gonna zoom in here so you can see this a little bit better. Oh, actually, let me move that other one over. So make sure you see both of those. So here's investor U. Here is options trader me. Of course, in my scenarios, I'm always the winner. If it's your show, you can win in all of your shows. I'm just having some fun. Okay, so let's pretend we were to buy these contracts at 27 bucks. Where's 27 bucks? Let me put a line where 27 bucks is. 27 bucks is right there. Bam, 27 bucks. Okay, that's the line. That's where we're buying. That is where we are buying. At worst, if we drop where we going, we probably gonna come down to where we already identified. This is what's called technical analysis. Just looking at this information in these pictures to be able to make assessments, right? And decisions that literally, once again, can change your life if you know what you're doing and you get serious, right? So this candle right here, I want to make red because that was a bad week. We had a bad week. We always have bad weeks, right? So we pushed up, and then another week we went up, and then we came down. And then this week shot back up from there. And then, man, something amazing came out about Lucid. They skyrocketed. Crazy week. Right. So let's pretend that this were to happen in 1, 2, 3, 4, 5 weeks. We get to our target. Right. Actually, take that back. Let me take that back. I gave you the scenario to walk through how it could happen, but pretend it's not 5 weeks. It's just by the time our contract expires. So we're gonna fast forward into the future. On January 19th of 2023, this stock is sitting at $65. We have made money. We've made money. How much money have we made? Here's where you get the power of options. Got to know how to do the math. So if I bought shares at 2,700 and it went up to 65, then that's basically 6,500 minus 2,700. All right, so bam, I made $3,800. All right, and make sure I do that math right again. I bought them at what was that? 2,700. It went up to what did it go up to? 6,500. Yeah, so 65 minus 27, $38. I had 100 shares. 3,800 bucks. All right. Oh, let me actually get rid of that one. So somebody do the math for me. What's my percentage return? Made 38. My profit was 3,800. It cost me 2,700. My return. What was my return? I'm gonna let somebody figure that out and tell me. Get y'all involved while I work on this side. So somebody figure that out for me. Pull up a calculator. If you know the know how to do it in your head real quick, do it in your head. If you trade options or investing, you definitely should know the formula to calculate return pretty fast. Middle school kids can learn it because I've taught middle school kids. Fifth graders can learn it. Are you smarter than a fifth grader type concept? Yep. All right. So here's the beauty over here, though. With my options contract, all right, let me put a little bar up here. So price closed. When my contract expired, it worked out. So we all made money. The person who bought it as an investor and the person who bought it as a trader. You both made money. But how much did the options trader make when they spent less? They spent a third of what this other person spent. But how much did they make? So here's how much they made. So I got to take 9, 10. There's a price that's a break even, right? If you hold it for a year, it has to get above a certain price just to break even. Oh, matter of fact, let me double check my strike. What strike was that I used? Oh, yeah, it was 27. Okay, cool. And let me change this right here. So I said above 37. I mean, above 30. No, it's actually above 27. That's called your strike price. The price you believe that the stock is going to go above, right? So I'm gonna put that right there at that line, right? You see right there where we got 27, that's your strike price. That's what you believe the stock will be higher than, right? A year from now, we're pretending that we successfully worked out. But there's one other little calculation you need to know. Just basic stuff. There's a break even. What is the break even? If I hold this thing for a year and it doesn't work out, just to at least break even, huge basic in understanding the risk and value of anything. What do I need? How many seats if I do a concert? I'm a party promoter. How much money do I need? How many people do we need to break even? Where my investment and what I put in, I at least can make it back. I haven't lost any money, but I didn't make any, but at least I didn't lose, right? That's a constant. Every business school in the world, any project management, anything dealing with anything related to investments, right? Your break even. What's your break even? So the break even is real simple to calculate. It's the strike price plus how much the contract cost, which was $9.10. So what's $27? 27 plus $9.10 is $36.10. So I'm going to put this at $36.10. And I'm going to I'm going to make this line yellow. So here, and I'm going to drag it across, right extension. So this right here, this is my break even. Right here. That's my break even. I want price it has to get above that in a year. Now it got way above that. Okay, cool. So now to calculate how much we've made to get to the big whoo of this long, beautiful example is it's real simple. I take 65 and I subtract 65 from the break even. So what is that? 36.10 was my break even. So 65 bucks. Let's just say 36. Keep it right. Keep the math simple. 65 minus 36. So how much is that? That's 29 dollars per share. And I own how many shares? I own 100 shares. So I made how much? I made 2,900 bucks. Put that there. So my profit, $2,900. $2,900. So you made a little more than me. You made 3,800, but it took you 2,700. I made 2,900, but it only took me 900. You can already see 900 times 3. 900 times 3 is 2,700. So you definitely did not make a multiple of 2-3 times that. So my percentage return, my investment, no, your investment, my trade kills yours, because I used a fraction of the money that you used and I made more money. We believe the same thing. We believe the stock was going up, but you just don't know anything about options. Oh, excuse me. Let me do some more math real quick. Did anybody have my answer? Anybody? What's my return over here? Investment cost me 2,700. My profit was 3,800. Antibody. So 40% return. 140% profit, right? 40% return, just meaning, right? So I'll take the 2,700 times 1, which is what I put in, right? Times I'm sorry, 2,700. 2,700 times 1.4 is my 37. Keep trying. Unless you cellular data. There we go. All right. So if I made a full what's 27 times 2? 27 times 2, or 100% return, to double my money, I had to get to 54. I didn't do that. I got to 38. Right. So I was up there. I was moving. I was moving. All right. It's moving. But the other side you can already see. Actually, wait a minute. Did I just say that the wrong way? I'm supposed to be teaching the class. I can't even lie. Sometimes I do this and my brain just like, it'll just be like, it'll be like, wait a minute. So let me double check my math. Gotta double check. It's okay to double check the math. It's okay to double check the math. I just want to double check it. Right. Double check it. 2,900 divided by 910. It's 3.18, but you gotta subtract 1. So the true return, what I actually made, is 218%. So 40%, you made 40%, I made 218%. All right. Dawn, it's the 1. You gotta subtract out the 1. And it's like the difference between the 2 with the 1 in there or without is like, think about it like this. If I had let's say I made 2,800 and divided by my 2,700, then that's 1.03, right? But I didn't make 103%. I only made 3%. So you got to subtract out that 1, because that's the initial what I put in. So what did I make over what? So that's all it is. That'd be tripping me up too. So let me put these numbers here. So investor, 40%. Nice bet. That ain't bad. 40% in a year. That's great. That's great on the stock. That's great. 40% is amazing. That's great. I don't want you to ever feel bad if you get a 40% return in a year. But I do want you, and I tell all my students this. This is the path. Level 1, there's 4 levels to this game. I'm gonna say them real quick. Level 1 is you're a passive investor. All you know how to do, you don't have enough information, knowledge, experience, confidence to really do anything other than buy NASDAQ, buy a few stocks, and invest in them every month the same way your 401k works, and just relax and let compound interest do the rest. It's passive. It doesn't require a class. You don't need charts. You just need to really have, one, the discipline to do it for the rest of your life. It should be a life skill, lifestyle. All right. If you're not doing it right now today, I challenge you. Start. Reach out to me. You don't even need to reach out to me. I'll tell you what to do. Go to M1 Finance, buy NASDAQ, and buy X amount of dollars you can afford. If in your head right now, you think I can afford $150, then I want to push you. Do 250. It's just gonna make you more money later. That's all. So whatever that comfortable number is, stress yourself just a little bit. All you're gonna do, you're gonna cut other stuff off that you don't need anyway. This is more important. This is more important than your Netflix right now. This is more important than whatever some of the subscriptions. Man, people got 20, 30 subscriptions coming out their account every month. All of that, cut off all of that stuff. Go through your budget, cut all that crap off that is not going to benefit you in the future, and put it in the market. Put it in the market. What would happen if you did that over the last 10, 20 years? You'd have more money in the market. I'm about to show y'all in a second. It's going to piss some of y'all off. But my profit, my return over here was, what did I say my return was? It was 218. Let's say 220%. I think that was the number. Was that the number? Let me do this math again. What was that? 2,900 divided by 910. I'll do 910. Oh yeah, 218. So just say 220. So you made a 40% return. I made a 220% return. Here's the crazy thing. I could have said, you know what? I want to put in the same amount of money you're putting in. So for $910, I actually could have bought 3 contracts. Just to, we both like, yo, we're not gonna spend any more than like $3,000, right? We're not gonna spend any more, right? We're not gonna spend any more than like 3 G's. So you made 40%. I made 220%. But here's the crazy part. If I had bought 3 contracts instead of 1, I would have made 2,900. Do this math too. 2,900 times 3. I would have made $8,700. That's really matter of fact, let's use that. That's really the apples to apples buying power, right? I want to use if we look at spending the exact same amount of money, right? So 910, and I'll put in parentheses 3 contracts. So that's the key. So it's 2,900. I didn't make 2,900. I made 8,700. My return is still the same. Profit goes up. Return same percentage because I spent more. Right. I made 8,700. You made 3,800. How would you feel? How would you feel? How would you feel? How would you feel? I don't know. You tell me. You tell me. Wait, hold on. I'm double checking my math again. What did I have? Oh, I had 3. What is that? Oh. Oh, yeah. Okay. So one of us made more money. A lot more money. I made a lot more money than you. I use the same amount of money as you, but I made more money than you because I know about options and you don't. So if you knew about options, you would then get into level. Okay, so I told y'all there's level 1, passive investing, just buying some shares. You don't know a lot. You don't have the skill. You don't know a lot. Level 2 is now you're actively investing. What does that mean? That means you're doing what person number 1 did. You know a little bit about charts, technical analysis. You know a little bit more. You got to know a little bit more. Every level, you're going to make more money at every level. But every level requires more knowledge, more experience, more time, more commitment. It does. Level 4 is like full-time trader. You do this as a profession. That's level 4. I don't care if you get to level 4. You don't have to get to level 4, but you got to get to level 3. If you're an adult in this country, you spend money in this economy, you have to get to level 3. I'm sorry. There's no other way to make this type of compound money and interest. I know real estate's amazing. Yeah, get into real estate too. You need to buy homes and stock, homes and assets in the market. Those are the 2 keys to wealth. You got to learn one or both. You got to learn one or both. Right? You got to live somewhere and you buy stuff. So you probably want to own a house. You probably want to own some shares because you buy stuff and you have to live somewhere. It's real basic. It's basic stuff, right? But we're not taught this way. early. Imagine if I was teaching this to you in high school, this same content right now in high school. You know how fundamentally different your life would be? I know how different mine would be. I remember when I was at IU, I used to get my little refund checks. Man, I get $6,000-$7,000 refund checks because I was an RA. Man, Jordans, parties, clothes, CDs. I had every CD out. I had every CD you can name. You could walk in my room. It was like you was at a DJ booth. You was at a street side music in Bloomington, Indiana, in my room, because I didn't know what the hell to do with all this money. Could you imagine 19, 20-year-old Noble focused with a mentor, somebody who's told me how to do this? I just got a $6,000 refund check. I'm at least buy one contract of that, and I'm gonna buy another contract of Apple, and I'm gonna buy another contract of this a year from now. And those are the long-term plays. That's the easy kind of way to do options. That's what people be out here teaching, charging y'all $2,000-$3,000 for, just really teaching you the basics that I just taught you for free, and then telling you the more time you give it, the better. All right. If I showed y'all the percentage return for this same type of play that did not move in a year, but moved in a month or a week, when you get more experience, when you get to level three is options, right? So level 1, passive investing, you just buying stock. You don't know what you're doing. You just buying stock, but you at least know that you're building wealth, and that's cool. That's number 1 is actually the key step. If you never get to number 1, you don't get this. You don't get to wealth without step 1. You don't. Level 2, you now know enough to pull up a chart, study in the market a little bit, right? You're a little more savvy. So you can look at these charts and you're like, hey, we're at a good price based on support and this indicator, yada, yada. I want to buy now. You want to buy. So you're going to add specifically when it makes sense to buy. When it makes sense to buy. Just buy low, sell high. All right. Let me show y'all this real quick. No, I ain't going to even show you that. I'm going to show you that. Level 3 is options. The first 2 are investing based. They're dollar for dollar, 1 for 1. The buying power, there's no leverage, there's no extra buying power. It's just however much you have, that's how much you can buy. When you get to level 3 is the game changer. Why? Because with options, I just showed y'all in this example, with the same exact money that you have, you bought 100 shares, I'm going to rent 300 shares, and I'm going to make more than you from the same move. And I'm a rinse and repeat. So think about 20, 30 years of me versus you and I won't even say me versus you, investor versus trader. Or think about the person that's investing and then in some time learns to also become a trader. You can trade the same stocks you're investing in. You technically could have bought 100 shares. You could be like, you know what? I actually do want to own some of these shares, but I'm really just trying to make some income. You could have bought, you could have split it up a little bit. You could have bought mostly in contracts, but you could have bought some shares. Another thing I didn't tell you guys is with this type of contract, what the contract actually does, it gives me the right buying that contract. 90% of people don't try to own the shares when they're buying options. If you're trading options, you're just trying to make income. You're trying to make faster money, right? You an investor, you over here investing. You're trying to make faster money, right? So 90% of contracts do not people don't hold them until expiration. 90% are not held to expiration. The 10% is the wealthy. Why? Those the people that I would consider quote unquote in that wealth stage of life, they're just trying to accumulate more shares. So you actually would have the option to own those 300 shares, right? But when my contract expires, I want to exercise that contract. I actually want to own those shares. Right. It gives me the option of owning those shares, but I didn't pay. I wouldn't have to. So, right. So there's kind of 2 ways to do this options thing. There's the options for income. 90% of people are not holding them till expiration because they want to own the shares. 90% of us are just trying to make money on the moves because the percentage returns are higher and it's faster money. And we all want to be rich and filthy rich and crazy and chill on islands and my dream, let me tell you, I would share with y'all one of my dreams. I love jet skis. I love water. I'm an Aquarius. I'm telling you now, some point in my life, I'm going to have a home on a lake. and I'm going to walk out to not my boat. I'm gonna have a boat too, but I'm gonna walk to my jet ski. I'm gonna hop on my jet ski. I'm gonna turn my hat backwards. They're gonna probably have wireless iPods or something by that point. I'm gonna be listening to my music. I'm gonna be on my jet ski, and I'm gonna go get some breakfast at a little spot right around the little bay, right around the bay. It's gonna cost some money. It's gonna take some money to get there. That's something I want for me. I want my family to be able to come to my home on an amazing lake or the coast. Lakes be kind of dirty. I'm really talking about the ocean. I'm thinking like Miami-ish. I ain't thinking about no lake, like lake's dirty. I'm like clear blue water. You know what I'm saying? Like that's something I want for me, but I want it also for my family, right? How am I gonna get there? Working my whole life? Staying at Bank of America making 100,000 for the rest of my life? 150? What if I get to 150? Yeah, yeah. I knew back then I could do more than that, right? So a lot of this is a belief in yourself. At the end of the day, it comes down to a deep, deep, deep belief in yourself. You either believe you're worth the money, you believe you're worth helping your family, protecting your family, or you don't. At the core, it's really a belief of value, of self-worth. The psychology of trading and why so many people don't invest is deep. I'm telling you, it's deep. 45% of Americans do not own one share of anything. And since I know I'm talking to mostly African Americans, let me go here too, because I know the stats on all this stuff. This is what I do. I should know the stats on this stuff. There's a report that comes out. They stopped doing it. I wish they still would do it, but Ariel Schwab, they used to do this Black investor survey. There's one from about like 7-8 years ago. It blew me away. It blew me away. Why? Because it basically said that African Americans, this is a survey done by a professional company. This ain't Noble's opinion. Sometimes I put this stuff out and people be like doubting it. I'm like, I ain't quoting me. I'm quoting the best research in the world, and you're doubting it, right? You got something to say. I don't care what you think, right? This is a company with a good reputation, yada, 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 whatever, right? So I like data, right? I like data. I like information. I don't like to get in debates with people. Love to debate me, and I do love to debate. But what you don't realize is when you enter into a debate with me, I'm instantly going logical, stats, facts. Like, what's my logical argument? What do I have to support my argument that just makes more sense than yours? And if yours makes more sense, I want to learn from you. But it's a dojo. When you get in there, it's war. It's war. Right. So anyway, what this survey, Black Investor Survey, said was that, and I think this is true to this day. I'm sure it's true to this day. I'm sure it's true to this day. My guy. Oh, they got a 2021, even better. See, that's what I'm saying. Charles Schwab. Charles Holland just posted. Check that out. Matter of fact, let me pull it up. Let me pull it up. You know what? We about to get sophisticated for a second. Hold on. Let me grab this report real quick. Let me grab this report. Where am I live at? I don't even know where I'm live. Where am I live? I gotta find myself. Wait, hold on. Because I can't click on his link from where he sent it. Am I live here? I should be live here. Oh, you know what? I know why. Okay. I know why I can't find it. Okay. Let me see. Charles. Let me type it in. Schwab. There we go. I was just about to say, send it to me. He sent it to me. Where's it at? Okay, here we go. All right. So let me pull this up real quick. I want to pull this up while we talk through this stuff. So Charles Holland Jr. is the one who sent it to me. Somebody said, "Yo, with you on that house by the beach. Hey, with you on that house by the beach, you come to the house. You want to come through?" Dawn, what's up, Dawn? She said, "Thanks for that, Charles. Appreciate that." So let me pull this up real quick. I want to show y'all this. Let's see. Stop sharing. Let me stop sharing. Let me get my branded stuff back up real quick. All right. And then let me find this. Which tab is it? Where is it at? Oh, here we go. Bam. Okay. Okay. Now let me find me. Where am I at? Okay, there we go. All right. So this is the new Ariel Schwab Black Investor Survey. Shows Black Americans continue to trail their white counterparts. Good Lord, their white counterparts in building wealth. Signs of younger investor engagement offer hope. Okay, cool. So that's a good thing, right? So I used to read these reports. You see, I got away from it a little bit. I used to read these every year like clockwork. I would just, at being who I am and what I do, once I got into like teaching and all that, I felt like, I got to make this my craft, even the teaching my craft. So I should know all the best stats, statistics, and reports. I do this once a year. I'll just take some time. I guess clearly I just forgot about Eric Schwab. I did it last year. I'll take 2-3 days a weekend and just find, and I'll sometimes even buy some of these surveys because some of this stuff is like proprietary information. You have to buy it, right? They ain't just giving away all this hard work, and they ain't giving away all this for free, but a lot of it is free, right? So I'll take some time and just find the most interesting, best data, best research, best surveys. It's in the back of my head. Why? Because I want to be able to help people, but I need to know what's happening in the world. And I need to know outside of my own little experience here in this bubble called Atlanta. You come to Atlanta, you think everybody making money. Everybody ain't making money in Atlanta. Everybody looks like they making money in Atlanta, right? And Atlanta's not the whole, it's not the whole country. It's not all of Black America, right? So I try to make sure I stay current, of what's really happening, to put together a narrative for myself to just better be able to serve my customers, my students, my friends, myself, right? So let's see. They usually have like a big summary. Okay, this ain't a ton. Um, Look at this. Check this out real quick. Discuss the stock market growing up. Let me see. What is this? Pandemic. Despite this, a sizable minority of Black Americans. Black Americans forced to tap into their savings to make ends meet because we have less money. And also you got to look at spending habits and discipline and some of that stuff too, right? But a lot of that is passed down from what you got from your parents. A lot of us, our relationship with money is the relationship our parents had with money. Did they evolve enough? And I hate to say it, but I'm gonna say it. Y'all already know in every one of our families, and I'm not saying it's just us. I'm not beating up on Black people. I love us too much to ever do that. But I have to be a realist. I have to talk about facts. A lot of us can't prepare our kids because we're having kids too early. It's too many babies who are having babies. You haven't developed yourself optimally to raise somebody else to give them the type of skills to be able to really set them up and prepare them for life. We just don't talk about it enough. There's a whole bunch of stuff on social media, and we don't really be talking about nothing we need to be talking about. We don't. More than twice Black American. Okay, so more than twice as many Black Americans participate in 401k. 12 versus 5. Oh, that's borrowed money from their accounts. So 12% of us borrow money from our 401k accounts. To get through COVID, 12% borrowed. White Americans, 5% borrowed. Almost twice as many Black Americans dipped into that emergency fund. 18% of us dipped into that emergency fund with COVID. 10% on the other side. And 9% of Black Americans, they asked their friends. Okay. And 9% of Black Americans say they asked their friends and family for financial support in 2020. Only 4% of white people say, based on this survey, right? Okay. Interesting. Optimism could perhaps, with unique circumstances of 2020, create an opportunity for historically underinvested Black Americans. Not only are Black Americans beginning to walk the walk, okay, it's good stuff. We are also beginning to talk the talk. Adds Hobson. Who is Hobson? That is her up here, Melody Hobson. She's CEO and president of Ariel Investments, right? Black woman giving us Black research on Black people about investing. All right, you should know about this survey. You should pull it up with your family and look at it and just talk through it. Have these conversations. Make that a conversation around the dinner table. Not what Will and Jada doing. Not god doggone Megan Good and Devon breaking up, acting like they about to be buddy buddy. You getting a divorce. Why y'all acting like y'all buddy buddy? You getting a divorce. Clearly, divorce means y'all not buddy buddy. I ain't even getting into that today though. Right? And that's cool. Talk about that stuff too, but have these conversations. So what is this saying? She adds, Black Americans are now much more likely to discuss the stock market with their families than in the past. That's positive. That's great. That is great to hear. Discuss stock market growing up. Black Americans, 10%. Now, based on this survey, 37% are discussing. That is amazing. Look at that compared to white Americans. 23% of them used to, right? So they doubled, but now 36 to 37. Look at the beauty of that. It's not about the race of race, right? It's not about that. This country's done some stuff to us historically. We know. Okay, you gotta just like with a chart. I don't just read the one candle. No, I go back to look at the whole picture. How did we get here as African Americans right now, where we are in this moment? Jim Crow, slavery, civil rights, man, we can't even go back to Africa because we don't know that history. We just know this time here, but this time here has been very brutal to us. It has, but we now have more technology, more access, more community, and when we get our minds right, this is a beautiful statistic. 37% now are discussing the stock market. That's 3 times, almost 4 times more than in the past. So thank God for COVID. For that reason. It's a good reason. It's sparking conversations. That's amazing. That's good. That's good. Let me find one more stat real quick. Let me see if I can find one more worth talking about. 401k is the first step to becoming an investor. 401k, yep. I started my whole story talking about 401k. Trust remains an issue. Ooh, trust remains an issue. Trust in the financial services. Black people don't trust. We really don't trust the stock market. We don't generally trust, and that's been for decades. I don't even need to read this to know that. We primarily just have not trusted the systems to specifically reach, speak, and engage with us in a way that help us to make money also for our families, right? It just hasn't been trust. It makes sense. Let's see. I don't want to read what he's talking about. Retirement plans. Okay. 2020 stock market current investor status by age. Okay, this is good. Let's go here by age. I'm gonna blow this up. By age. Let's see. Stock market 60% of 49, which is equal to their white counterparts. That's good. Okay. So people under 40 are basically kind of black, white. It's equal. That's cool. That's all. That's cool. It's good. The closing of this gap among younger investors being driven by new investors, 3 times as many black investors as white investors, 55 times 5%. So 3 times more African Americans, black folks have been investing from 2020 to now. 3 times more have like something's clicked. All right, something's clicked. And that's crazy because me and my cousin Joel, the room that we manage on Facebook, it's called Insider Trading. I want to invite you to join us there. It's a free community, free group. Tons of great people, probably about 30,000. Don't let that number overwhelm you. A lot of people talking, posting, sharing things. Me and my cousin always doing free stuff like this. I'm live in the room right now as well, teaching, right? So, great community, right? Started about 10 years ago. So, we've seen that the growth of the room went from like 5,000-6,000 a couple years ago to 30. I know for a fact this is true because there's more people who now are reaching out to me, signing up for classes, courses, just asking questions. I can see it. All right, so that's clear. Black Americans age 40, 63%. So by age 40 to 59, we go up a little bit. The number goes down. And above 60, our parents tend to know less. They're not as invested, right? So if we're looking at this based on generation, this generation didn't know as much, right? That 40 to 59 is really all the same generation. Generations span 40 years up and down. So if you're 40, your generation is everybody 40 years younger and 40 years older, right? So this technically is all, and I know we don't think about it like that, but for now, right? Under 40, 63% of people, right? Participating in the market. Well, yeah. We go a little higher, it gets lower, right? So it's cool. Let's get this number up to 100, 95, 75, right? We need to get that number higher. How do we do that? By talking to our families, by engaging, by making this stuff directly, talking directly to our families about it. So I walked you guys through a lot today. I've been on for an hour and 30. I try not to do more than 90. I thought I was gonna be able to hit all these markets. It's cool. Follow me on Facebook. Follow me on YouTube. Subscribe to the channel. You'll get a notification when I go live. It's just being noble. Actually, let me pop up this other. Where is it at? No, it's not that one. Ooh. There we go. All right. So here's my info. All right. I want you to make sure you follow me, subscribe. You're not gonna. There's not a lot of people spending the time to just really give this information out and help. And then if you've enjoyed this, I actually have a 7-week options course that is about to start in about a month. You got some time. Go to limitlessclass.com. Limitless class. It's on the shirt. Limitlessclass.com. Give me your email. I'm not putting the registration, all that stuff out until tomorrow. But if you go to my website and give me your email, I'll make sure you get it, or just follow me. No pressure. I just want to help. It's 7 weeks. It's super detailed. I assume you know nothing. Just slow and methodical. We cover, it's about 40 hours of content. The format is really dope. I teach live on Tuesdays at 8 p.m. On Thursdays, I drop a couple digital videos so that you can kind of supplement, get a bit more. Saturday, I pull up for what's called office hours, where it's just free flow open like this. We can talk about anything happening. Some of my trades, some of your trades, actually. What I'm gonna tell people in this class is I want you to stop trading for the 6 weeks, 7 weeks. Why? Because what's the point in trying to make money when you're in the class learning how to make money? Just to be patient. Be patient. A lot of people I won't say a lot. Some people from my last class that ended were losing money while they were going through class. I'm doing some consults now with some of those people, and now they're like, "Oh, because I got through the class, I realized why I should have did that. As I should have did that." It's like, yo, just get through the class. Stop investing. You can't stop trading for 6 weeks. You might have a problem. The point of the going through these courses, the 7 weeks with me. I know I keep saying 6, 7. The point of these 7 weeks is my favorite number. And I've done this 3 times. This is the 4th time. And I have people who are making money, who literally are making tens, thousands extra in a year, not killing it crazy, to tens of thousands, and some doing even more because they took it serious with somebody who takes it serious. Class is very affordable. It's $750. The class that I'm working up to build will be exponentially more. It's worth more. It's worth a couple thousand easy because this is a life skill. All right. I'm working right now, even with 2 students who are amazing educators, and they're about to we're going back revamping these 3 pilot classes that I've done. Low price, get you in under 1,000. Let me teach you something how to make money doing this options thing for the rest of your life. I know my stuff very well. I'll taught kids, M.B.As. You give me a chart, I can show you how you should be thinking about it to make money, the technicals, all that stuff, futures. I know I didn't get to futures today. I wanted to. But we go through everything. Every time I add a little bit, learn a little bit more. So this next class will be the best of these 3, but this will probably be the final live class with the discounted price before I give and create the full out live video, super well organized modules, checklists, study guides, really like a college level course to make sure that you're actually learning and can do this. It takes a lot. I had a question. Somebody asked me about a week ago. They was like, yo, why do you charge for something that's so needed? And I'm like, because it's so needed. We pay for everything. And if you really saw the work ethic and the grind and what it takes to be able to really create a quality course, I ain't just getting on here talking. You know how many thousands of hours and money I've invested to be able to teach well. So I love if you wanted to join us and me, that'd be great. No pressure at all. I told you the price is $750. I won't even have the registration link ready until tomorrow. We have a lot of fun. You're getting a lot of time with me. You're gonna get we're gonna build in, my team is building in some peer-to-peer challenge-based learning. You're gonna learn about the Greeks, which are the different mathematical components. That's what you need to know. How do these options make money, right? How do they make money? You need to know that. It's not as simple as I made it seem today. It's more complicated than that. You need to understand volatility. You need to understand delta. You need to understand theta, which is the time decay. Every day your contract is not in the money, it's losing value. What is in the money? What is theta? What is time decay? You need to know these terms. You can't do this without knowing the terms. Trading is a culture. Investing is a culture. It's just like hip hop's a culture. Certain slang terms, if I went to the suburbs and said certain stuff, they wouldn't know what the hell I was saying if they're not a part of my culture. Trading is a culture. I could literally confuse you right now just talking in normal terms that traders understand, but that you won't if you are not a part of my culture. Right. So I really want to use these courses to bring people into the culture of trading. We spend the first week talking about the basics. What are options? Very detailed, We spend the second week going through the Greeks. How do they make money? Really good quiz, couple examples, right? Want to build that up even more this class. You need to know that. Then you got to talk about the platform. You got to be able to do the technical analysis. How do you look at a chart and know if a stock is about to go up or down? If it has a high probability of going up or down, when should you buy? When should you get out? Those are the same questions everybody has. And there are answers. There's answers and techniques, but it takes time to learn this stuff. We spend some time learning the basics of technical analysis. I give you some more advanced tools built on top of those. And then we start to put it all together into an actual system to be able to look at literally any stock and know where to buy, why you're buying, to know how to catch when the market is reversing. The market just dipped really bad. When will the market reverse? If you took my last options class, you should know, you will know. I know it's just math. Most people can't tell you though. When can we officially say the market is actually attempting now to go back into the uptrend bullish direction? When will we be able to say that the market is now officially back in an uptrend? When do we have the highest, the best time? When do we find it's a concept I created? It's just a term I coined from some of the best indicators in the world. It's called a profit window. It's so simple, but it's so smart. I figured it out like about a year and a half ago. It changed my trading. It's making me more money. There are specific times the market gives you windows of profit to make more. It's just when we're the most volatile and everybody's going the same direction. That's when you got to be in the market when those things happen. And you can actually kind of sneak in before those even happen. And think about that. If you get in Apple before everybody else is, oh, Apple's back in new, let's say Apple gets the new highs. It gets up to 190 2 months from now. You're going to hear everybody talking about it. Everybody talking about it. But you're late. When people are talking about the stock, you're late. People like me were in before that trend turned into a strong trend because I know how to get in early and I teach my students how to get in early on that. But even if you miss that, how do you still know you're in that window, that profit window, when that stock is the most volatile? It's all just probability. How do you get out? When do you get out? Placing the orders. It's rinse and repeat. It's rinse and repeat. But it takes so much more than I'm saying. It takes time. It does. I'm gonna start sobering people up. If it took you 2 years to get an associate's degree, 4 years to get a bachelor's, 8 to 10 to become a doctor level PhD, it's gonna take you 10 years to get to the PhD level of trading. That's day trading. That's PhD level. That's 10 years in. 95% of day traders ain't making no money. They're not. 95% of people who tell you they're day trading are not consistently making money. They're not. Everybody knows the statistic, but everybody runs to day trading because it's the fast money. Where you should be aiming is that swing trading, knowing how to do what I'm talking about. Pull up Lucid, look at Lucid, make a couple of sound decisions, manage the risk to reward, make sure it's clear, it's a good trade, it's for the right reason, you know something about the company, and then put the trade on, be disciplined, make your money, get out, don't be greedy, relax, and then do it again for the same reason. This shouldn't be all exhilaratingly exciting. It shouldn't. It should be kind of boring because it's like cooking. You just got to go downstairs and cook. Cooking's real exciting when you first start because you don't know how to eat. You don't know how to feed yourself. All right, this is a way to feed yourself. Once you get this and it's just lifestyle, it's like, yeah, I got to trade. Looking at taking the trade on Apple. I'm checking out Facebook. And when I'm in some calls on this, all right, it's just normal. It's just normal. All right, so 7 weeks with me, you'll learn a lot. Charles, let me see. I can't. Why this thing won't pull it up? Charles said my why. They're not going to give it to us. We have to take our reparations from the market. Investing is a revolutionary act. Ooh, Charles, that's deep. Ooh, that's deep. That's deep, bro. I think like that too. It is. It is on some level a revolutionary act. It is. It really is. Because if we start doing that historical conversation, which I would love to get into, but I'm not, I'm about to wrap it up. Yeah, we know. This country has done some damage to African Americans' trajectory. Yeah, reparations is just a repair. That's all it is. We don't deserve a repair. We had some damage. We know slavery did some damage. Jim Crow did some damage. Not allowing us to read, start businesses did some damage. The Homestead Act that gave 280 million acres of land out west, 10% of the country, a free handout. All you had to do was sign a deed, promise to build on it. But black folks couldn't apply for those that Homestead Acts, those Homestead Acts in the 20s. We got like 1% of that land. So a middle class was created for America, kind of given a free handout after the New Deal, and we weren't involved. Wow. Wow. America. Wow. So until I'm president, we probably won't get reparations. And it's definitely old. We could build a business case for why. It's not about emotion. It's about history, facts, and simply repairing damage that we know was done to a specific community economically. So yeah, how do we get it? Trading. But not the type of trading most people are thinking about, which is just like, oh, let me just get into this with no skill set. No, you need to learn and approach this the same way you would approach getting an MBA, the same way you would approach getting becoming a systems administrator, becoming a tech person, becoming a project manager, an engineer. You don't just stumble into that stuff. It's super thoughtful. You prepare. You're ready for the journey. You know you're not going to be a chemical engineer overnight. But people hit me up like, yo, I want to get in the trade. I want to quit my job in like 6 months. How? You're gonna jump into one of the most complicated like you're competing against the best financial minds in the world, and you're gonna master it in 6 months. I'm about to start sobering people up. I am. Every time I hear somebody talk about day trading, I'm gonna just say that's a 10-year journey. That's a PhD. It's a PhD. It's a PhD. You need a bachelor's. Matter of fact, you don't even need a bachelor's yet. Just get your associates. Longer term options trades. Right? Your that's your associates. Your bachelor's is your shorter term options trades. Do that. Get to 500-600K first. Then worry about day trade. 95% of the people I talk to, and I've talked to hundreds of people in the last 2 years who are day trading, 95% of the stories are about loss. I don't even day trade every day. And I can, but I don't. It's too much pressure. It's It's the allure of the fast money. So this next options class, man, it's gonna be dope. I get better every time. I have fun. I'm always having fun, as you can tell. So thanks for watching, man. Share this video with somebody that you know and that you love. I send these to my mother when I'm done. She's like, you ain't say your tagline. You didn't you gotta wrap it up. So this is for my mother. Make sure you share this video. If you care about yourself, your family, send this to family, cousins. Post it, please. Share this with somebody. It's not about me. It's about the information. I don't care if you ever sign up for a class. I don't. Why? Because I know how to trade. I'm okay. And I'm getting better. And the people that I'm supposed to reach, I'll reach. I don't worry about none of this stuff. It's in God's hands. But I do want you and your family to learn and be a part of this community of folks who are starting to get it, and that light turned on for COVID. I just want more of us to get it. That's all. That's all. Somebody said with this choppy market, you should take a trade 30, 45, 60 days out of the technicals. Out of the technicals, I think out of the technicals, give it to you, or out of the technicals, if they give it to you. Yeah, maybe. Yeah. So I agree. I teach in my course, you at a minimum should give your contracts 30 days. The truth, though, is depending on what stock we're talking about, most trades, because the market loves to pull back and shake you out and do a lot of that dancing, most of the very consistent, clean moves only last a couple days. So yeah, I'll buy something for 30 days, but I'm not trying to hold it for 30 days. But that's me, right? And I got a different level of expertise. So I agree. If you're new, you got to give it more time. The newer you are, the more time. Think about it. It's a correlation. The deeper, longer you know, the more you master this thing. You can get to level 4, but level 4 is only because you took something from level 1. Passive investing. You're passively investing. You got heavy into level 2. You started to get into the charts. Level 3, you started to learn about all the different types of options. You can sell, you can buy, straddle, strangles, right? It'll take you years to really master options. But I will say, yeah, the people who can make money the fastest consistently, they know the most. They've been in this the longest. They also have the most scars from the journey. And we don't often talk about all the losses and all that it took to get us to become profitable. So, yeah, great comment. I love that. I appreciate that. I agree. You should be, if you're new, you should be thinking 30, 45. Yeah. You should be thinking longer term. You shouldn't be thinking like, what's the market going to do next week in 2 days? No, that's fast. That's fast. That's fast. Now, I will say this, though. Stocks like Apple that have great volume, you could buy a contract on Apple, give it 30 days, and the stock just happened to get the type of volatility that literally pops your contracts up and you're up 700%. If you're up 700% in 2 days, please do not be greedy and say, oh, I'm going to give it 30 more days. Why? Because there's a good chance within those 30 days that is going to pull back on you and your 600% is going to drop down to 140. Or it might even go lower. And then you're like, dang, I'm only up 70%. I was just up 600%. How did it happen so fast? It can happen really fast because you really don't yet understand how options works. If the stock pulls back 5%, your options contract might pull back 80%. It's not apples to apples. The percentages are not apples to apples. Right? It's not. That's why you can make so much money so faster, because of volatility. But now I'm in the class. So anyway, thanks for watching. Please share this with somebody that you know and that you love. Follow, subscribe, all of that great stuff. My podcast is coming soon. I'll be doing this more. I got some merch that's coming, some really dope kind of, little slogans and clothes. It's gonna be a good year. Thanks for watching. I appreciate you. Share this with somebody that you know and that you love, who wants to make more money for themselves and their family. Because that's honestly a radical and beautiful form of love. It really is, to provide financially and make sure that they're okay. And that when you go, if you got kids, or you like me, I ain't got no kids right now, but there's people you want to leave something to. Got to make sure you do that. Got to get in these markets. Have to. Talk to you soon. Peace.